You have probably heard CDSL often called a no-brainer investment. It's often praised as a market leader with a foot race like a competitive advantage. But what if the foot race isn't as unbreakable as it seems? Before that, please make sure you subscribe the channel so we can reach 1000 subscribers. Now, back to the point. In next few minutes, we are going to look past the hype. We will uncover the real threats challenging CDSL's dominance and figure out if this stock is still a massive opportunity or a bubble that's getting ready to pop. So, to get the hype around CDSL, you have to understand what it does. Think of it like a massive digital vault of a stock market. When you buy shares, they aren't just sitting in your brokerage account, they are held securely in electronic form by depository. For years, India's market has been dominated by just two of these giant, NSDL and CDSL, while third depository for Gift City now exists. NSDL and CDSL are the players that matters to the most investor. This duopoly is the first pillar of the bull case because it creates high barrier to entry. You can't just launch new depository overnight. CDSL has been on phenomenal run, fueled by the explosion of new retail investor in India. As of March 31st, 2026, CDSL surpassed 18 crore demat account, a testament to its scale. But this growth isn't just about more accounts. CDSL has built a platform earning money from annual fees, from companies' transaction charge, and a growing list of services like e-voting and digital document storage. This translates into what has historically been fantastic looking financials: high profit margin, a strong return on equity, and very little debt. On paper, it looks like a perfect business tied to the long-term growth of India's capital market. But this is where the story gets more complicated. The very foundation of that bull case is being tested. First, the monopoly narrative was always an overstatement. CDSL has always operated in a duopoly, but now its rival NSDL is also a listed company, and that changes the game. For the first time, investor can compare two side by side, forcing a hard look at CDSL premium valuation. And that brings us to the biggest red flag: the price. CDSL has often traded at a very high price to earnings ratio, soaring well above the market average. Bulls argue this is justified, but a high valuation prices imperfection, leaving no room for error. Lately, we have started to see some of those errors. Recent quarter results have shown a slowdown from its incredible growth path. For quarter 4 financial year 2026, CDSL reported a 20% year-on-year decline in consolidated net profit to around 80 crore, even though revenue from operation grew. This profit dip was driven by low other income and rising operational cost for things like technology, which squeezes profit margin. Furthermore, the overall pace of new demat account additions in India slowed by 22% in fiscal year 2026. AM market volatility highlighting the business sensitivity to market cycle. The battle between the two depository is heating up. While CDSL has historically dominated the sheer number of retail accounts, NSDL has always been the giant in terms of actual value of assets held, thanks to its deep root with institutional investor. Now that both companies are public, the numbers are under microscope. In the fourth quarter of fiscal year 2026, NSDL reported a consolidated net profit of 90.3 crore on a total income of 487 crore. By comparison, CDSL's net profit was lower at about 80 crore on a total income of 268 crore for the same period. While CDSL has been praised for leaner operation, the fact that NSDL is large on key metrics like revenue and asset under custody had led many to question if CDSL's premium valuation is still warranted. Institutional investors seem to be taking note, with recent data from March 2026 quarter showing that both foreign and domestic institutional investors have decreased their holding in CDSL. The narrative is shifting from CDSL as untouchable giant to one of the two players in an increasingly competitive area. So, where does that leave us? Is CDSL a hidden monopoly or a looming bubble? The truth is, it's neither. The monopoly story was always an oversimplification. CDSL is a fantastic high quality business in a duopoly. However, the bubble risk comes from a valuation that has been priced in perpetual frictionless growth. The assumption is now being seriously challenged. The company is facing a perfect storm: slowing profit growth after a massive run up, rising cost, and a directly comparable publicly listed competitor fighting for investor attention. The day of easy explosive growth might be over, and a period of more normalized competitive growth is likely beginning. It does not mean the stock is destined to crash, but it does mean the buy at any price logic is far riskier today than it was 2 years ago. The fortress isn't crumbling, but its walls are being tested. What are your thoughts on CDSL? Is the premium valuation still justified, or is it the time for caution? Let me know in the comment below, and make sure you subscribe the channel so we can reach 1000 subscribers. Thank you very much. See you in the next video. Take care. Bye bye.